Dubai off-plan property market is booming. Tens of thousands of investors are piling in. But is this a smart play or a high-stake gamble that could cost you everything? Before you sign anything, let's break down the real risks and rewards. Just this year, off-plan transactions in Dubai have surged by more than 35%. In fact, over 60% of all property sales here are now off-plan. That's billions flowing into development that haven't even broken ground yet. Why are so many investors betting big on properties they can't even walk through? Is this a shortcut to building wealth or a trap that's left some buyers regretting their decision? In this video, I'll show you what's really driving Dubai off-plan boom, the numbers you need to know, the pitfall most people miss, and how to tell the difference between a risky gamble and a strategic play. Let's get into it. So why is off-plan getting so much attention in Dubai right now? Let me give you a sense of what I'm seeing both in my own deals and with clients. Not long ago, I helped a client reserve an off-plan apartment in Meydan. We locked in a price about 15% below what similar ready units were selling for at that time. By handover, the same property has appreciated nearly 30%, all before he'd even picked up the keys. And it's not just in Meydan. In Business Bay, I've seen annual appreciation rate hit 12%. Over in Al Marjan Island, a lot of investors are getting in early, with developers marketing project rental yields of up to 8 or 9% once these projects are handed over. But it's not just the numbers that make off-plan so appealing. For me, and for many of the investors I work with, the real game changer is flexibility. I have personally used payment plans where you put down just 10-20% upfront, then continue with more small monthly installments during construction. And in some cases, even after you receive the keys and moved in. This structure means you don't have to tie up a huge amount of capital at the start, making it much easier to build your portfolio over time. The demand on these launches is real. Just last week in Meydan event, I met 2 British investors who reserved units with less than 20% down and a payment plan stretching well beyond handover. Indian buyers now make up to 30% of all off-plan market, and every launch I attend is packed with Europeans and Brits looking for the next big opportunity. On paper, off-plan can look like a smart strategic play, but as I always tell my clients, you need to know where the risks are hiding before you jump in. That's what we'll tackle next. If you have watched Dubai's property market for a length of time, you know the upside can be huge, but the risks are real and they can catch even experienced investors off guard. One of the most common challenges in off-plan is project delays. Take Dubai Lagoon project for example. It's launched back in 2005 with plans to deliver thousands of homes by 2008. But years later, many buyers are still waiting for a resolution. While that's an extreme case, it's not unusual today for handovers to be pushed back by 6 months or more. And industry data shows that about half of off-plan projects in Dubai face some kind of delay. It is also important to recognize how market cycles can affect your investment. In high supply areas like Business Bay and Dubai Marina, there have been periods where prices dropped 10 to 15% during downturn, especially when a flood of new units hit the market at once. If you need to exit earlier in one of those cycles, you might have to sell at a discount or wait longer than planned for these markets to recover. The reliability of the developers you choose matters a lot too. Dubai has some of the world-class names, but there have been cases where developers were fined or blacklisted for launching projects without proper registration or failing to deliver what was promised. A clear reminder that due diligence is critical. And finally, the little details in your contract can make a big difference. Off-plan contracts are often complex, with clauses about handover dates, penalties, and what happens if project is delayed or cancelled. If you're not careful, you could end up waiting longer than expected or fighting to recover your deposit. These risks don't mean you shouldn't consider off-plan, but you absolutely need to get into it with your eyes open. In the next section, I'll show you how I help my clients stack the odds in their favor to avoid the most common pitfalls. Understanding the risks is only half the story. The real advantage comes from having a proven playbook to manage them. Over the years, I've developed a system that helps clients navigate the Dubai off-plan market with confidence. Here's exactly what I look for when helping investors protect themselves and maximize their returns. First, always start with the developer. In Dubai, the difference between a top-tier developer and the rest can be huge. I recommend focusing on rare platinum or gold-tier developer names like Nakhel or Ellington. These companies have established regulations for delivering quality projects and meeting regulatory standards. If a developer can show you a strong track record and a rare recognition, that's a sign to dig deeper or walk away. Next, make sure your payments are fully protected by Dubai's escrow system. By law, at least 70% of your payments for off-plan properties must go into a regulated escrow account, and funds are only released to the developers as construction milestones are reached. I always verify the escrow account is properly registered and that the developer is transparent about how funds are managed. Some developers like Shoba Realty even use blockchain technology for extra transparency and security. When it comes to payment plans, flexibility is key. I generally advise clients to avoid committing more than 60% of property price before handover. A 60-40 or a 50-50 plan means you keep most of your capital in reserve, giving you more leverage if there are delays or changes in the market. Location is just as important as developer. I focus on areas with strong long-term demand and a limited pipeline of new supply. For example, Jumeirah Gardens offers a solid yield and a relatively controlled supply of new units, while Al Marjan Island is attracting attention for its projected rental yields and major upcoming projects, including a casino. By contrast, areas like Dubai Marina are facing a wave of new supply, which could put downward pressure on prices. The contract itself is your ultimate protection. I always insist on clear clauses covering penalties for late handover, strict limits on force majeure delays, and an exit option in case the project's viability changes. These details can make all the difference if things don't go as planned. And finally, before you sign anything, stress test your liquidity. Ask yourself, could I carry this investment for 24 months with zero income? If that's a stretch, it might be better to restructure the deal or walk away than risk getting cut out by delays or unexpected costs. Mitigating off-plan risks isn't about avoiding them completely. It's about stacking every advantage in your favor. With the right strategies, you can position yourself for a stronger result even if the market throws you a curveball. So, is buying an off-plan in Dubai a risky gamble or a smart strategic play? The honest answer is, it depends on how you approach it. If you treat off-plan like a get-rich-quick scheme, ignore the fine print, or chase the cheapest deal from an unproven developer, you're rolling the dice and the risk can be real. But if you do your homework, stick to RERA approved developers, use Dubai escrow protection, choose a payment plan that fits your cash flow, and focus on location with the real long-term demand, you're stacking the odds in your favor. I've seen clients achieve excellent results by being disciplined and detail-oriented, sometimes outperforming ready property investors, especially when they've locked in a great payment plan or bought early in the right project. But I've also seen others get caught by delays, oversupply, and contracts that didn't offer enough protection. The bottom line, off-plan isn't for everyone. It's best suited for investors who have a medium to long-term outlook, can handle some uncertainty, and are willing to put in the work up front to protect themselves. If you want fast, guaranteed returns, or can't afford to wait out a delay, you might be better off with ready property. But if you're strategic, patient, and prepared to follow a proven process, off-plan can absolutely be a powerful way to build wealth in Dubai's dynamic market. If you want to take your Dubai property investing to the next level, I invite you to join my free weekly investor webinar. Each week, I'll share the strategies I'm using with my clients and answer your questions live. It's a straightforward way to stay ahead of the market and make smart decisions, whether you're just starting out or looking to refine your approach. If you're ready to invest with more clarity and confidence, just use the link below to reserve your spot. I look forward to seeing you there.